Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is February 18th, 2026, and we're diving into Moody's latest earnings report for the fourth quarter and full year 2025. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Moody's has delivered a robust performance this quarter, and I'm excited to break down the details with you.
Revenue and profitability overview. Let's start with the top line. Moody's reported a net revenue of $1.9 billion for the fourth quarter of 2025, which is a 13% increase compared to last year. For the full year, revenue reached $7.7 billion, up 9%. John, what are the key drivers behind this growth?
The growth in revenue is primarily driven by strong performance across both Moody's Analytics and Moody's Investors Service. The Analytics segment saw a 9% increase in revenue, while the Investors Service segment reported a 17% increase for the quarter. This reflects robust demand for Moody's solutions and favorable market conditions.
And how about profitability? The adjusted EPS for the fourth quarter was $3.64, a 39% increase, and for the full year it was $14.94. It's up 20%. What contributed to this impressive growth?
The significant increase in adjusted EPS is attributed to strong revenue growth, margin expansion, and effective cost management. Moody's operating margin improved due to efficiencies and strategic investments, which have paid off well.
Segment performance and strategic initiatives. Let's delve into the segment performance. Moody's Analytics reported $943 million in revenue for Q4, up 9%, while Moody's Investors Service reported $946 million, up 17%. What are the highlights here?
Moody's Analytics continues to benefit from its strategic shift towards subscription-based solutions, with recurring revenue making up 97% of total revenue. This shift has led to a 30% decline in transaction revenue, but it's a positive move for long-term stability. Meanwhile, Moody's Investors Service saw strong growth driven by investment-grade issuance and robust market conditions.
It seems like Moody's is focusing heavily on recurring revenue. How does this align with their strategic initiatives?
Absolutely. The focus on recurring revenue aligns with Moody's strategy to provide decision-grade intelligence embedded in customer workflows. This approach not only ensures steady revenue streams, but also strengthens customer relationships and enhances value delivery.
Operational efficiencies and future outlook. Moody's reported an operating margin of 40.8% for Q4, with an adjusted operating margin of 48.7%. How has the company achieved such operational efficiency?
The improvement in operating margins is a result of disciplined expense management and strategic investments in technology and efficiency improvements. These efforts have allowed Moody's to leverage its scale and enhance profitability.
Looking ahead, Moody's has provided guidance for 2026, expecting a high single-digit increase in revenue and adjusted EPS between $16.40 and $17. What are the key factors influencing this outlook?
The guidance reflects Moody's confidence in continued demand for its solutions and favorable market conditions. The company is also focusing on expanding its AI-enabled interfaces and decision-grade intelligence, which are expected to drive growth and profitability.
Capital allocation and shareholder returns. Let's talk about capital allocation. Moody's generated a free cash flow of $2.575 billion for the full year. How is the company utilizing this cash?
Moody's is committed to returning capital to shareholders. They declared a quarterly dividend of 103 cents per share and repurchased 0.9 million shares in the fourth quarter. Additionally, they have a remaining share repurchase authority of $4 billion, indicating a strong commitment to shareholder returns.
With such a strong cash position, how does Moody's plan to balance growth investments and shareholder returns?
Moody's strategy is to maintain a balance between investing in growth opportunities, such as AI and data analytics, and returning capital to shareholders through dividends and share buybacks. This balanced approach supports long-term value creation.